Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Can I get a screen and audio check in Discord Trader Lab? Well, good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. The Trader Lab's community of like-minded traders that come together to leverage their collective experience. It's a community of traders. Our senior trader has over 50 years experience. I've got going on 46 years, both professionally and out here with you. In addition, I've shared 60 PDFs of structured trades that you will see here often in the stream. Plus, there are additional advanced methodologies that are available in the Trader Lab. This is really an advanced trading process. It is really about understanding how the market works, why it does what it does, and how you might at times get in alignment with it. And it's really about career building. So if you're interested in the business of trading, you might find the Trader Lab a different kind of community. It is not also a plug and play. This is really about business. So if you're interested in the business of trading, it's really about rolling up your sleeves and taking the experience you've already had in your trading journey and potentially making some adjustments to it and potentially eliminating things that are just noise and trying to get to the processes that actually can help you generate a statistical edge. The business of trading is very similar to gaming. We're in an environment that's 100% random 100% of the time. So the idea is if you can reverse engineer strategies that give you a statistical edge over a random distribution of outcomes. We do not control the market. We don't control the news. We control nothing other than our plan and our execution. If that is logical and makes sense to you, then use the link in the bottom of YouTube if you ever want to visit the Trader Lab. There's a library of webinars, the community, and of course, the PDFs and a lot more that you can potentially take advantage of to help you move along. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. We're in unprecedented volatility due to, as you guys know, external economic events, and they are having a substantial impact globally. And this is not something that you will not forget. However, if you're in Trader Lab, you have trade plans, and you should have, per all the posts pre-market today and previously, adjusted your trade plans to the volatility and risk, drop down in size or go to micros if necessary. And of course, if your plan and account size does not fit the volatility, your job is not to trade. Your job is to be here for tomorrow. By the way, this is what the 60 PDFs look like. They were done a long time ago, and when I selected these specific trades to help traders reverse engineer structured trades so they could vet them, it was really with the idea of a broad stroke. When you develop a trade plan, you will find there are many more opportunities to be created, and of course, with opportunity comes risk. Now, this is the RTH Open. I'm going to attempt to show you some structured trades, but I will say that for me, even on a day like today, I am, of course, very wary of it. Now, I posted before the RTH Open, and all this is available to you in the Trader Lab, about what I anticipated for today. In fact, I'm going to see if I can't grab this because I just want you to see what goes on in Trader Lab. And by the way, there's no right or wrong. I don't want you to think that. But what I want you to see that Trader Lab might offer you is a community of serious traders that are there to help each other. So I'm just going to try to get back to 8:30 or 8:27-ish, wherever it was. Because I just want you to see that. And part of the reason, when you trade as long as I have, and it's only not because I can predict anything, because I can't, nobody can, but here, let's see. Here, note all, we are overdue for an extreme short squeeze. Remember how pennants are built, whether you want to trade in the environment, but as traders, we can never get myopic. Follow your plan and respect structure and developing levels. Wait for your vetted structured trade plans. Adjust your risk management to the requirements or wait until they fit. I don't know if I said anything more about it. I really don't remember. But that's coming in before the RTH Open. So the idea about this is to understand market mechanics, how the market works, why it does what it does. And the other part of that is that retail trader behavior, potential. Here's what I have here. Good luck, patience at 8:27 Central Time, 3 minutes prior to RTH Open. Potential early selling, then responsive buying and or squeeze. Now, this is the Trader Lab. Now, again, I want to say, no, this is not about predicting anything. It's potential. And this is the library webinars. Thanks, Ned, for curating this. If you're interested in this, I would suggest use the link in the bottom of YouTube if you want to visit Trader Lab. Now let's get on to the trades for today. And by the way, nobody escapes outsized volatility. The rotations were so high that I could not keep the rotations on my screens. And I have some large screens here. So, it was one of those days. So now there's a couple things. Now I'm going to discuss structured trades, but you're going to see outsized volatility. No matter how long you've been trading, it makes it difficult because it's hard to gauge, even though we understand harmonics or rotations, it is very difficult. Now here's the other thing. The limit order book, you can see 10, 14, 13. When you have a thin book, think of the book, the order book, kind of like pebbles on a street. Pebbles in the surface. If you have a lot of pebbles, and when you drive your car over all these pebbles, there's resistance. But as it thins out, it's like smooth blacktop. When it gets smooth, there's no resistance. Now, when I say no resistance, I'm saying it's the velocity and the movement to fill orders. They gobble them up, so the market's going to go further. So that's something when we talk about the limit order book and order flow, these are things, especially if you haven't had this experience before, you're just not going to be aware of it. Now, there's two things to understand here. First of all, now we use statistics in the Trader Lab. And the thing about statistics is, while they still play a role in this, they are less important, at least to me, because we're in a significant economic fundamental event that has global economic, as you guys are all aware at this point. Now, the thing that made me think about the squeeze, besides just seeing it so many times over the years, I mean, all kinds of different events, crises, events, 911, all this kind of stuff, Desert Storm, 87 crash, which I traded through. So I've seen all these kinds of things before. But let's talk for a moment about human behavior. We know Thursday, well, actually Wednesday, but let's just say Wednesday the party started. Thursday, the crash, if you want to call it that, maybe, began. Friday continued. Now, investor and retail trader behavior is reading the news, all the doom and everything else, which may or may not be accurate. Who can predict? So we would anticipate anybody who can't take it anymore would sell Monday morning. I got to get out. Panic, panic, panic. Well, what happens after panic? Squeeze. So you get your late shorts in here, and then you have your shorts currently in the market. So that means the possibility to fill the gap from this morning and to squeeze up into yes and anything, right? That part we don't know. So that's what set up what I posted. I just want to give you the explanation. So that means because of the range and the volatility, shorts in the morning, and then somewhere along the line, the possibility exists to squeeze, and subject to how the squeeze plays out, then to sell again for reversion trading. And that's kind of what the lay of the land is. Anyway, I hope you're getting something out of this. If you're in YouTube, please hit the like. Also, subscribe to the channel. If you have questions, please post them. I will do my best. By the way, I'm not streaming from Costa Rica. Let's see how this goes. Okay, so let's go. This is called developing volume point of control. Now, what we are talking about here is auction mechanics. Two things. When you have the RTH open at 8:30 Central Time, which is here, there's a couple possibilities. Wherever this swing high is, especially in a high volatility environment, we have the possibility to open, and there's a high probability we're going to test the ETH volume point of control. All these statistics are available in TraderLab. You can get all of these. It's in the drop downs in the library, in the document section. High probability, I'm not going to give you statistics. I've done it for years, so they don't change. It does, and the thing about statistics, in the scheme of things, they're not high on the, you might say, the totem pole. They are just a piece. Context is always number one. What's the context? We'll see you later south of the border. What typically happens from impulsive sellers? Well, we can go down, of course, and never look back, or we can go down, rotate up, take out the opening swing high, and then continue. Let's see what it does. These are kind of, your typical behaviors. This is a variable high volume node. The opening swing is here. So when I see this, let me explain this to you. You guys have followed the stream. One of the things to understand about trade plans and auction market theory and market mechanics, they are generic. The market behaves the same way almost every day. What the variables are in this is volatility, rotational range, and having to adjust risk management. Otherwise, you bring your plan to the market and you've made your adjustments, and you also are going to put on a seatbelt because you're going to be stimulated extraordinarily by FOMO and emotional stimulus, adrenaline and fear and greed, and all these things are unleashed at heightened levels. And if you're in the Trader Lab, this is all discussed on a regular basis, but especially under these conditions. So this is too high. This is the language of the market. Remember what this is all about. This is the language. I don't use indicators. I'm not saying you can't. I don't. And I don't use them because I found for me, and I'm only talking about me, not you, a way to eliminate, or I should say minimize, because there's never certainties. That doesn't change. But to minimize conflict and ambiguity. The less you have on your chart, the more you can have a process. So minimal inputs, okay? The first short, now there's two things. Opening swing high, VPOC migration. This is too high. Two ways to do this. This is a short in the Trader Lab. This is too high. This is a structured trade. Two places to get into it. Here, here, there, and then south. Now, this is a statistical probability, as is this down here. So let's just see what it does. Now remember the opening swing, right? Variable high volume node, right? There. This is also a potential short in TraderLab. These are structured trades and they're in those 60 PDFs. This is where we're trying to go. Okay, structured trade. This is called a naked volume point of control. I don't have time to show you guys the higher time frame. There's just too many trades that I want to cover today. So these are right here. Too high. Let's look at the mechanics very quickly. You see this level? This is auction market theory. Now, for me, I'm looking for this to come out. Now, the joy of trading is when? Great question. I can't give you the answer because it's 100% random. There's no reason why, other than we didn't, that we wouldn't come up here, get outside of this, pop, and then it would be another short for me. So I have short. This one, I was looking for the break. I didn't get it, but it is a short or nothing. Break low. Support is here. Look at the market mechanics. You can learn this in TraderLab. Too low, bounce, too high. Right here, this is absorption. They are absorbed by the sellers. When you have a green bubble, that's delta. That means, why didn't it go up when you see a green delta? Why didn't it go up from here when you see the delta? Because the sellers were there and the sellers are here. Right there. Notice it? Now, there's no precision in trading, but let me ask you, do you think maybe understanding how the market works as opposed to an indicator on its own might give you an edge? Just asking. Not saying this will work for you because you're going to need, if you find this interesting, to kind of trade differently or think differently. So if this is too high, and we failed to take out the opening swing high, which of course to me had a good probability. And this is too low. Look at the levels. These are generated by participant behavior. All this yellow line is measuring volume. It's not telling you to get long or short. That's not how this works. The volume profile is just a chassis. And the thing that's different about it, all prices are not created equally. The volume at price is what determines. For example, the fact there's a price here, is that price the same as this one or this one? It's just a price. But what makes it different? What makes this price different is that we are measuring volume at price. So you can have a price at a location, but if you run out of buyers, even though somebody paid too high a price for a product, if we rejected it over here, why might that price, if we come back and the price is still too high, what's going to happen? Shoppers are going to leave the store. If we come back where the price was too low, shoppers are going to leave the store. If we come back to what was too high, same as that. Shoppers are going to leave the store. All these are shorts in TraderLab. Up to you. And where are we trying to go? Here. Okay. Come back to the mid and the VWAP. Potential short continuation or nothing. Target here. Okay. That's the first sequence of short trades. Now, there's more. Now, I'm going to take you into advanced processes. And I don't like to do this, but I can't help myself. Because we have so many, when you have rotations and volatility like this, you've got tons of trades. Not saying your trades, I'm just saying structured trades, okay? By the way, if you have questions, post them there in YouTube. And Discord is selecting a different microphone. That's interesting. Let me see if I can straighten this out, guys. Hold on. I don't know if I can switch it now. Dan, you want me to try to switch the audio in Discord? Hold on a second, guys, in YouTube. I guess I'm not getting a response here, so I guess I'm just going to stay with YouTube. Please give a like if you're in YouTube. Sorry for the delay, guys. Resting liquidity over here. Target. Naked volume point of control. Target. And then there's more. This now is an advanced structured trade. Two aspects to it. We're below VWAP in mid. We have VPOC migration. This is too high. I got to label it. You notice, guys, and thanks for visiting Trader Lab today. I follow a process. What I found in my travels as a developing trader, and it's almost 46 years of this now, that something needs to be anchored or consistent. The market is whatever it is. Let's call it random. If the market is random, then we don't know the rotations. We don't know anything. But you will notice we have high level of rotations. And one of our traders posted. Sorry, I'm just trying to read all the chats. They're not on the same monitor here. I'm spread out all over the place. So this is too low. This is advanced methodology. Here, I'm going to show you an advanced process. This is a naked volume point of control. Last time we were down here, that's why it's a target. Now, at this moment, I am not looking for longs. I am looking for the shorts to get more selling in here, which is my plan, and then a short squeeze. And as you guys, unless you missed the top of the stream, I showed you where all this was posted prior to RTH Open. This is an advanced continuation short. Now, here's how this works. So first of all, too high, see you later. Remember, target. Now, this trade could be over, or you have a runner. But let's assume you're just trading the targets. Everybody is different. Let me show you this trade. Now, this is advanced. Resting liquidity in the book. Sweep. Purple dots are sweeps. When I get a sell sweep, the possibility is for a counter rotation. Developing volume point of control is retail, and you've got your mid and your VWAP. Here's a question for this astute group. If the developing volume point of control is moving lower, this is the retail price, highest volume, and we're rejecting everything above at the moment. We bounce into liquidity that was waiting at a key level. This, by the way, naked volume point of control. What is it, by the way? Last time we were down here, whenever that was, this was too low and we left it behind. Well, it works the same as this. This is in real-time migration. In other words, this is the current developing auction. This is left behind from a previous auction. And so is this up here, okay? So if I get below this, same as I got below this and below this, then I can continue. Now, how do I do this? Let's look at the alignment. If this gives me my bounce, this could either be the end of everything and we're going up and it's all over, or I come down and I get below this. Now, if I get below this, and now I have another sweep, so I'm looking for a short against this right here. I see a sell sweep. What does that suggest to me? Counter rotation. Now, right here, I'm going, what's going on? You ever ask yourself what's going on? Because I have a structured trade. Now, it's an advanced structured trade, but I got a structured trade here. And I'm looking at it and I'm going, how do I get short? The sweep is keeping me off the short. I come down again. This is acting like support. See it? I get a sweep again. I rotate off. Again, this is advanced. So now over here, I get another sweep. I rotate, but it's lower. I get a buy sweep, and that suggests lower. It doesn't go lower. So I'm in this chop, chop, chop. So right in here, and you guys in Trader Lab ought to screenshot this because we'll come back and talk about these. The sellers are below the buyers. So the sellers are obviously, I don't like to, maybe I shouldn't say obviously, but apparently are in control. Too high, this is resistance. Too high, resistance. Selling. Selling sweep, rotation. Buyers, there's the buyers. Sellers are above the buyers. Buyers take a shot on goal. Now, are these guys getting long? I suspect not, but it's not my job. Right here, sellers are below the buyers. This is my level here, okay? And I don't know. I'm going, what's going on? Out here. Now, it needs to clear this and then rotate back. Let's see if it does it. This is the area. This high volume, right? Let me put a little line on here for you just so you can see it. This is the key piece. This right here, in here, is high volume. High volume is a micro or fractal of that. In other words, high volume for the whole day. This is the highest volume at the time. This thing right here, that's where the most volume is. If it's too high, I leave it. I'm not paying that. Now let's come down to, quote, a fractal. Where's the volume here? It's right there. There. And that's where this little node sticking out is high volume. And now what it's saying is this chop, 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 break low is a trigger. The high volume is here, and we are under this. I'm going to draw you another little box here. Just trying to give you, now what I'm going to draw for you is price action. Now the point about price action is, and I just started really thinking about it, like how can I explain to you what price action is and order flow? How do they fit? Well, when we're learning order flow, and this is when you have a high tier order flow tool like Bookmap, you're going to look at this and it's going to take you some time to understand what does it say. It's a language. But what price action is the result of the order flow. So I thought about this and I said, you know, I need to help developing traders visualize and understand, and then you can drill into this. And there's a lot of education in Bookmap on how to actually read this as it develops. Once you understand order flow, you're not going to be entering here or here. You're going to be entering in here. So less risk. I mean, you know, if you're wrong, you're wrong, by the way. You're going to take a stop. But instead of being out here, and the volatility, the range, because of volatility, your stops have to be further out. So in the Trader Lab, for developing traders, and everything has to be vetted, it's enter one tick under this, stop 3 ticks over here. And in this volatility, you have to vet and make sure any of this is viable for you. Let's look. Notice where the volume is. It's here. What happens over here? Higher fractal or time frame. Notice where the volume is in the developing daily time frame. What is this? This is a fractal. Think Russian dolls or Matryoshka dolls. That's kind of what we're trying to do here. So these are inside of each other. And you can get down into any kind of micro structure you want. See? Let's just give you a little something. This is all Trader Lab. This is micro high volume here. There's your trigger. Here's your pullback to the volume in there and the volume here. Compound confluence. That's a short in the Trader Lab. This is a potentially get out of Dodge because of this. This is nothing you can do. Here's your chop. We're relating it to that. I'm just giving you some idea. These are all structured trades. Now, some of this is not going to be your thing naturally. This is another short in the Trader Lab. These are all, this is advanced, by the way. This is a short in the Trader Lab. See it? Can you see it? You guys following me? This is structured trading. Trader Lab, are we doing okay in Discord or is the audio low? I will repair that. Okay, you're following. How's the audio in Discord? Anyway, these are all shorts in Trader Lab, structured trades. Short, 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 helmet, trade management, scaling, risk neutral. Now, this is another target, and so is this. Liquidity comes in the book right here. Now, let's remember what happened at the last liquidity. By the way, what's this? Break low, advanced trade. Short, 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 right? Next level. Here, let's watch. Sweep coming into the liquidity, no clue. Buy sweep, sell sweep. Whoa. Really? Now here, if you took a short against this, you would take a stop. Now we have to watch. And let's just watch. Now remember what the plan is for today. Selling somewhere to somewhere, part of the thrill, and then, and we don't know where. It's not our job. This is another target down here. Who knew and who knows? We didn't quite get there. When you break above this, right here, and what you're looking for is for it to break under here. And then we're going to look for the same kind of trade, short continuation trade that we took over here. So let's look at the difference. Break high. What's over here? Here, I'll show you. Now these are advanced processes. You can learn these in Trader Lab, but these are not trade recommendations because how do you learn a specific trade? Tremendous amount of screenshots, reverse engineering, seeing if you can develop a statistical probability. Here's your high volume. Remember what I did over there? I showed you the high volume. So the high volume is here. So for me, if I'm looking at this, I'm thinking, okay, another short. Because there's no way I can tell that anything, just like you. I don't know. I just use structured trades. So right here, if I look to take the short, it could be here or there, and the stop over here or over there. Okay? And I take a stop. Now let's watch. Now, if it breaks under here, I'm going to be looking for another short. But this is my support. You'll note, let's come back here. You'll notice how it didn't do that. It broke, came back, broke, came back, broke. Okay, all good. On the short, let's look at the similarity here. It broke, came back, came down, broke high. And then where did it come? Here. Watch. Who knew? Do you see this change? You guys should be screenshotting both of those to create the contrast in the behaviors. There's a piece to the, what's the change? Break high, test. What's this? Break low, test. See, do you see that? Please give a like. Can you get something out of this, guys? I don't think I have a shot, no pun intended, at getting into real time here unless I just skip ahead. But the reason I do the stream this way is if you learn or can see structured trades, then you can see that, say to yourself, well, if you're not getting the results you want, maybe I can do that. And if you can say, maybe I can do that, then come to TraderLab. There's no cost for it. And the thing is, if you don't have a long there, then you're just going to hang out here and work on your crochet. Now, the plan for today was early selling and then a squeeze. And then after that, all bets are off, as they say. So let's look. This is interesting. Now, the fact that liquidity comes in the book, it's not like, but let's try to look at this a little bit. See if we can see anything interesting. I'm just going to throw a little bracket. Now this, I'm just going to throw something around here. And I don't know really what's what with this because I can't look ahead. But I'm going to just throw this out here. So we just have it with a little box around it. And let's see just how this behaves. And let's also, you've got this one up here too. Same thing. Okay, this one is obvious. We can see that. So this, we come up here, they pull, this comes into the book. I can read this, but I can tell you by the time I read it, the market's probably going to be here. And in this environment, I've been running about 6-point stops. Not a recommendation. Remember, the order book is super thin, so skidding. If you're trading this, you should be act accordingly. Is the best thing I can say. So I see this. I cannot do anything with it. I just can't do it because I'm not gonna. I don't FOMO. It's either it fits or it doesn't. Let's look at this structure. So right in here, you'll see the micro high volume. I'm going to just show you structure for triggers. So I have this, they pull, this comes in, I see my seller, I see my icebergs. I got icebergs going off and very few stops. So I got my sellers, and I don't know anything. Trust me on this. I can prove it. I don't know. I have my buyers here, and I'm looking for them, and they're above the sellers. So the buyers are here. See the buying icebergs. So the buyers are there, and the buyers are there. I'm going to draw a little box around this thing. So I'm looking at the order flow, and I'm thinking to myself, this might be a short setting up. And look at and the reason I'm throwing a box here is when you see the green buy delta, that's our market orders, right? And the icebergs are selling. So these buyers, if you will, are being absorbed. That's what's going on here. On the other side, you see the buying icebergs. They're absorbing these sellers. So now, so you have a bracket, if you will, or a consolidation. That's what's going on here. Buyers on one side, sellers the other, and the buyers are above the sellers. Okay, buyers are above the sellers. Sellers are now below the buyers. So right here, this was their shot. Sellers are now below the buyers. I come up. I cannot get above this. That means the sellers are here. The sellers are here. Sellers are below the buyers. Lift, liquidity in the book. Press. Sellers are here. Buyers are there. Sellers are here. Sellers are here. Break low. Trigger. And this is fast, so just saying. This is an entry. For me, by the time I'm conscious, it's away. So if it doesn't fit, I just don't think about it. Nothing here. Now, let's look here. Liquidity comes in the book. You see the reaction off the liquidity. Let's watch some more. See this? See this? See, this is advanced TraderLab processes. But if you have an order flow tool and you can learn structure, now I'm going to move this because it doesn't extend. I'm just going to move it out so you can see how the structure impacts. Okay? So here, no bueno. unless you can act here or you read order flow up in here. But I'm showing you order flow, but I'm showing you when you're developing in the Trader Lab how you can enhance your understanding of order flow. And prior, as you're developing how to extract insights here, you can also use price action because the output of order flow is price action. So this is another short in the Trader Lab. Are you guys with me so far? Are we doing okay? Getting something from this today? Yeah, thanks, Dan. I'm not going to switch it now, but I'll check it next time. My setup is completely different here than it was from Costa Rica. I'm back here with everything going, and it's a different configuration altogether. So anyway, another short in Trader Lab. Buyers, they are being absorbed. 400. Well, whatever. Let me see here. These are sell icebergs with buy stops. Notice the liquidity. Notice the liquidity. You learn order flow, you can figure this out. And again, the outcome is random. Microstructure here, sellers, micro short here, volume, micro volume is here. Look at what you can do with this. Trigger is here. So buyers were there. That becomes resistance. Do you see what I'm doing? I'm using order flow and price action structure combined. Anyway, just kind of giving you an idea. Notice what comes in the book here. VPOC migration. And we're in the squeeze it area. I'm going to, let's see what we can do with this. I haven't seen any of this, so let me go take a quick look so I know what's going on. Okay. VPOC migration. Let's see if this doesn't look familiar to you guys. I'm just jumping ahead so we can do some golfing together. That means hit the ball. What is this? Variable high volume node. You saw me doing this at the beginning of the stream. And the reason I do this is it is a shop auction market theory, if you want to think of it. What is it really and what is the market? It's a shopping experience. And the thing about the shopping experience is why do we even have a market? It's trying to figure out what's too high, what's too low. This is the retail price because it's the highest developing volume during the day. When I'm showing you fractals and triggers, I'm showing you the same thing in a fractal. And a fractal is like a Matryoshka doll, Russian dolls. They're inside each other. Well, this in the developing time frame is too low. Well, and if this is too high, we can come back and check too low. This sets up a potential long to come back here and maybe even out there. Not a recommendation. So, and the reason I'm sharing this one with you is you guys have seen this. So, this is process. So the job in Trader Lab is to get long here if you think and this is a reversion style of trading. It's outside in, that's considered the in, and it could also be, if you think the trend is down, from this side down to there. This is a structured trade. This is a structured long. So you have structured short, structured long, or if you think the trend is down, then you're just taking one side. You see? Does that make sense? All of these are structured trades. All of these are available to you in Trader Lab, and the outcome of any individual trade is random. Are you guys tracking? Please give a like if you're in YouTube and visit the Bookmap Discord Trader Lab community if you're interested in these processes, building out the business of trading, trade plans, and being in a community of serious traders. It's not romper room. You can use the link in the bottom of YouTube. There's no cost. And then, of course, you have to vet everything for yourself, but it's a great community. And it can have, if you do the work, it can potentially change your outcome like it has for many other traders if you do the work and you're persistent. This is going to challenge you in ways you have not been challenged. Most of us start the business with indicators and time frames because we kind of think that's what trading is. And if you go out in the internet world there, you're going to see all kinds of the only thing you need and this does that. whatever. And everything works randomly. So it's not about what works or doesn't work. If you had nothing, you'd still have winning trades, you see. So the problem is we think that we have winning trades. And I have to repeat this because there's always new visitors. So apologies if you heard this before. We all have winning trades. So we think this is if we make it better, we'll have more winning trades. It's the most logical idea, right? However, in the casinos, gamblers have winning hands. But the casinos only play games that have a statistical edge. They don't make them up. There's no FOMO. They're not even attached to the outcome like we are. All they're doing is playing a game where they have no control over the cards coming out of the deck or how gamblers play the cards, but they do control how they play the game. And they only play games that have an edge that favors them, even though they can't predict what's going to happen. Well, we're in the same business. We can't predict what's going to happen here. But what we can do is only, quote, play games or take structured trades that have a statistical edge and accept the random outcome. The casinos don't change the game if they pay a gambler, and they do. Cost of production and overhead. It's important that you think about the business you're trying to be in, and maybe it might be somewhat naive to think that if you just get the right mix of indicators and time frames, that now you're going to have an ATM in the basement. Every indicator, every time frame, almost everything that you can imagine or is in your software toolbox has been gone through by everybody else. So there's nothing new, okay? Doesn't matter. So if there's nothing new and you're trying to find the needle in the haystack, I think the haystack has been combed through pretty well. So then it's understanding maybe why those things don't work consistently, even though you'll have winning trades, and then try to understand what can you do with the knowledge you've gained to create a yield from it. You have trapped equity. That's how I kind of think of it. Our experience is trapped equity, but what we don't understand is we may keep waking up in the same place trying to fix a process that's not actually aligned with the business you're trying to be in. That's why I decided and agreed, I should say, to do the Trader Lab, because I've seen too many traders over too many years go down the same paths, including me, by the way, early on, and kept waking up in Trader Groundhog Day. Trader Groundhog Day is when you work hard, you have winning trades, winning weeks, even winning months, and still you're moving in the wrong direction. So you fix, tweak, tune, and same outcome. So if that's you, it's typical for retail traders, and there's a good reason for it. It's because retail traders are on a quest to let Google Translate solve the problem, whereas backwards looking indicators in and of themselves may be the problem. And it's not that they don't have a place, they do, but you need to understand how the market works, why it does what it does, why we had the squeeze today, why after the squeeze we might continue either in the direction of the trend or just fill out and go into a two-sided trade. Also need to understand that trade plan is your ultimate guide, not predicting anything because we can't. We're not in the business of prediction. We're in the business of alignment. Remember where we're trying to go, up here. And it doesn't mean it's going to go there. We can fall out the bottom as easily as anything else. These are just structured trades. Short here, long here, or just short here, and you're done right here. I mean, there's nothing wrong with this trade. What do you think? Just one little trade. Bing, bing. Now, are you bullish or bearish? Well, I'm going to tell you what, I just follow structured trades, and I think the trend is down, but I also know that any trade at any time is just random. The market can come here, or it may never come back here, and we may fall out of here. That's what I know. That's all I can know. I don't try to know anything more than that, because then I'm becoming myopic. And if I have an opinion other than my structured trades in this business, my opinion is not worth anything, because then I'm closing myself off to what might be right in front of me. So instead, when I'm in this environment, I'm not in a predictive environment. I understand market mechanics, and that's what I try to share with traders in Trader Lab, to understand how the market works, why it does what it does, why it might come back here. We'll see what it does while we're waiting. You guys have questions, it's a good time to ask them. Since I'm just staying here in real time with you now, So you could see how this works. Why? If that's too high, let me mark this. And why? If this is too low, we can come back and check this. Now we've already done it, so we might not do it. I have no idea, and it doesn't matter to me. Um, One of the things now in the Trader Lab that I always suggest, and everybody has to vet these things for themselves, is a minimum 2-lot configuration. The idea of the first contract is to buy the stop on your runner. So, for example, if you took a short here, you'd get risk neutral, and then your target is here. And if you have three, another one. If you got long here, you'd be risk neutral, and then you're looking for this. If it falls out of here, the worst that'll happen is you will scratch. That's okay in my book. So let's see what we do. This is your support. It looks like it's going to maybe break it. We'll see. Questions, please post them. How we doing in Discord, guys? We still doing all right? I don't know where it's picking up the audio in Discord. It might be, I think I have an idea, but I'm not going to switch things. I'll check it for tomorrow, Dan. Which version of Bookmap? This is the Global Plus, if that's what you're asking, Supernova. Um, if you're interested in Bookmap and seeing what the options are, there's a number of different configurations and add-ons available. You can go to bookmap.com, check it out. Also, there's a link right down there to the Trader Lab. You can visit the Bookmap Discord Trader Lab community. There's no cost. You just have to confirm your Discord email. Make sure you're not a spammer, so it keeps the community protected from debris. And then all the resources in the Trader Lab are available. The Trader Lab community, the structured trades, those 60 PDFs I showed earlier, the community naturally, and the library of webinars if you're interested in this. But if you're going to come to Trader Lab, I'm going to say this, you're going to be challenged to change your beliefs. It's very hard. I'm only talking about me because I spent years with indicators. They were new when I started. I started in 1980, so it was all kind of exciting, Wells Wilder, all these new ideas coming in. And when you haven't had time to work with stuff and you throw one of those oscillators up on your chart, and you see the line crossover and the market goes in a direction, you think the Holy Grail did show up. Early on, I worked with, I shared an office with George Lane, who created stochastics. And I have to tell you, my jaw was on the desk when I first saw oscillators. I said, oh, this is great. And back then, I was a swing trader and a trend follower. So and then I went to system design and building because I was managing across a lot of asset classes. So I built systems to manage dollars. And I was a money manager. I was on a desk managing house funds, and then had my own business. So I've been in a lot of places here. As a money manager and I was a trading advisor, all kinds of stuff. So a lot, and that and a lot more. And then over the years, I got to train traders. That was both a very exhilarating and depressing experience at the same time, because I saw a lot of traders, wannabe traders, who worked hard, but they couldn't control their emotional states. Certain personality types are attracted to the business. And it's very difficult to understand that patience is more important than action in this business. And because of emotional triggers and lack of discipline or even developing statistically valid trade plans, I would say that's why most traders don't have any sustainability. I believe if you come to Trader, you can learn how to trade. Now, it's not guaranteed for anybody, and past performance is never indicative of future results. But I have, coached and mentored a lot of traders over the years when I think about it. But also, even no matter where you are, if you're sitting on a trade desk with me, or you're in a virtual trade desk in the Trader Lab, or even if you work with me individually, in the end, you have to change your behavior. It's very difficult. When I was using systems, I thought I really had it because now I could optimize. Well, all I did was a derivative of the same process that didn't work earlier, and that was me curve fitting indicators. So then I put more indicators together to create more certainty and then statistical outputs. It's very logical to do things like this. Notice where we were trying to go, right? This trade would still be workable, I believe, because your stop had to be below this. And I don't know if it would have taken it out or not. Now, if you didn't get taken out, that's your target, right? If you did get taken out and you see the absorption here and you have another trigger right here, you could get in again to come back there. All these are structured trades, by the way. Guys, you getting something from this? This is real time, right? Nico, are you following what I'm discussing here? So your target, so the trade, the last long, and again, not recommendations. So the last short was there to there. The long was there to there. If you would be risk neutral if you got taken out here, and it depends on how you adjust your stop for the volatility. Again, that's just something that's individual to you. Let's assume you got taken out and you scratched, or you got a few burgers in the basket, and this is another long entry. That's the target. So you could just be trading this. Look at the range. Tell me that doesn't work for you. Am I seeing a 50-point range here? $2,500 per contract, not including scalp. How you guys doing? Please give a like if you're visiting in YouTube. Be sure to grab the link and review this later. This is Trader Lab methodology. I'm going to tell you it's not complicated. What is complicated is randomness and uncertainty. That is complicated. And what's complicated is our response to it, our fear. Our fear prevents us from selling this. Oh, it's too low. Or getting a target down here. Or taking a long here. Right? That's our fear. How do you get control of your fear? Well, first of all, you're always going to be fearful. So you got to accept that and build solutions. That's what I have shared in Trader. How do you solve for our emotional states? A lot of this is in the library of webinars I've shared in Trader Lab, as well as those structured trades I've talked about. These are structured trades. Now, the thing about trading, which really throws a lot of us off, I think, and they look like this. You can download these if you're interested in them. What is so interesting about trading is it's generic. The processes stay the same. We have to, and this is order flow, by the way, a little something here. We have to make adjustments for volatility. So, long to there. Now, is this a short again? No, not for me, not a recommendation. But we can keep doing this. But now another thing you need to be thinking about is sell stops are under here, buy stops are up here. You got stops at the mid. You look at these guys coming in the book up here. What we did is we came back, we tested yesterday's range. This is actually a short if you have a plan for it, or it's not. I could show you these, but they're more advanced. The thing about Trader Lab, guys, it's not about action. It's really about patience and knowing where your trade is. It's not about, oh, let me sell this, let me buy this. No, you'll put yourself out of business if you think that's what this business is. This business is seeking a statistical edge and waiting for your trade. In the Trader Lab, we know where our trades will be that we have vetted individually. So for some traders, this is a structured trade to here, long to there. And for other traders, if it's not vetted, they don't have a trade here, they'll have trades elsewhere. or no trades if they don't have it. You only need one vetted structured trade that you can execute. And by vetted, that means it has actually a statistical edge. And now you're in the business of gaming. You're now emulating a successful business model, which is gaming. So if we understand how casinos operate, we don't have to reinvent the wheel. We actually are in the gaming business because we have the same environment. We control what we do. We don't control anything else. So just like the casinos, if we play the game, if you will, that has an edge, and we don't make games up along the way, we don't, if we lose on the last trade, we don't make it up on the next one. If the casinos pay a gambler $100,000 in a suitcase cash, what are they going to do in the next hand of blackjack? Same exact thing. They're going to deal the next same cards, same 7 cards, do the same thing. Because the only way they extract the dollars from the gamblers in a random distribution of outcomes is by playing a game that has the edge. It's the same for us. So yeah, we'll take stops. Everybody takes stops. I take them every day. Do I like them? No, that's an emotional response. How can you like paying a bill? Overhead and cost of production. You can't. But yet somehow it's much more for us when we take a stop than just business. It's a failure. We didn't get approval. You didn't get the little gold star on your head. You didn't get the pat on the back that you're intelligent. Have you ever stopped to think that has nothing to do with the business you're in? Yet we're wired to seek approval. All of this socialization and all these emotional things we bring with us. We also bring fight and flight with us, our primal wiring to avoid risk. So that's what drives us to seek certainty. Isn't it logical? You don't step out in front of a bus, do you? And if you did, hopefully your primal wiring would have you jump out of the way before you're even conscious of it. That's what's operating here, because it can't differentiate whether this is a bus or your intentionality to take risk. So it creates fear and triggers, let's look for confirmation. I want to be sure. Isn't that how you've spent most of your time as a developing trader, looking for confirmation? Have you ever stopped to consider it doesn't exist? What would happen if you actually embraced the idea that you can't be certain ever at any time here? So if you can't be certain, what is the advantage to you of looking for certainty and entering with outsized risk when there is still uncertainty no matter where you enter while you're looking for certainty? Does that make sense? Gabriel, the PDFs, the library of webinars, you can access all of that with the link in the bottom of YouTube there that says Trader Lab Discord. Go there, say hi. You'll enter the Bookmap ecosystem, if you will, on the Discord server. You're going to see all kinds of great stuff there. Find your way to the Trader Lab chat. It'll say hashtag Trader Lab. Say hi. There's a pin at the top. And also say hi in the community. If you're interested in the business of trading, you want to get comfortable. And then you'll see there's a lot of support and guidance. The whole point of the community is that traders helping traders. This is such an isolated business. It's like being under a rock when you decide to do this because nobody can relate to it. And think about trying to discuss this with your friends or even a spouse. All they can do is fantasize, just like you when you came into the business about what this is. They have no idea. So we only can get support from other traders who've walked in our shoes. And I can tell you, I've worn out a lot of shoes in the walking that I've done over 46 years of this. So, so many dead ends, I lost track because all these aha moments you get, but then they have no edge. They're just random. That's what keeps us doing things that don't have an edge. But we don't understand that this is a business of edge. not a business of prediction. And our drive is to be right, of course, and to be able to predict the next rotation. So that's where we spend our time. And that is generated by our primal wiring to avoid risk. You see? Can you kind of see some logic to what guides us to make decisions and also directs our beliefs that may have nothing to do with the business we're actually trying to be in? That makes sense? Sure, Gabriel. Supernova DX feed, I believe so, but just go to the bookmap.com and it shows you all the data feeds that can be used. This is MBO data, market by order. It's available through Rhythmic, I think also CQG, but I can't say for sure. And what it does, orders are tagged, and because they have timestamps, of course, and they're tagged, is it an iceberg? Is it a limit? Is it a market order? What is it? Stop. We can read that here. And then that gives us tremendous insight. You know, buy stops come out or icebergs on the other side. Now, the fact that iceberg is selling doesn't mean anything. It is when there's alignment with other behavior. You know, buying icebergs at a location means more to me than just the fact there's a buying iceberg maybe here or a selling iceberg there. Target was here. Remember, the long was there to there. You know, what is this? This is a almost a 40-point trade. How many of those do you need? That's just one. This is just one. And I showed you a lot of other trades. And you're going to take stops along the way. Just real world, okay? Everybody takes stops. What are you going to do about it? This is mid, and the interesting about the thing about this is yesterday's low. So often what the market does, it'll test the previous day's range. And here's a selling structure. Now this is advanced, so this is nothing more than something you can reverse engineer. It could be a trade for you, doesn't have to be. This is a little more structured, this to this, back to this, because this is more the primary trades I shared in those 60 PDFs. Because the goal I have in Trader Lab is to help traders kind of get just really establish an understanding of this process, which is really auction market theory. The volume profile is not it's a structure to overlay structured trades on. It's not a mechanical, it's not a system or anything like that. And neither is auction market theory. Those processes, whether it's the volume profile or just the concept of how the market works, is to help you understand what you're trying to do here, where you're operating, what these things represent. All this is showing me is, yet it's the cleanest version of what's going on. This is an outside edge, and the market can be doing this. And it can push through here. This is called the low volume node. If this becomes too high, this is out here, too expensive, the high volume, break low. This is advanced trigger. Again, if it doesn't fit your risk parameter, because your stop would have to be out here, then you don't have a qualified trade. And that's what sets that up. So this short can be from here, short can be from there to there, long can be from there to there, resistance is back here, outside edge. And it could be anywhere, or not at all. I'm just showing you some very simple structure that you can learn. Now, the other part about learning about structure is vetting triggers in alignment with structure. This is a trigger. This is also a trigger. There's resistance, you see. So if I come up here, I have resistance against here. I'm showing you something called fractals, trading in fractals, and it might be too complex for many of you. This is a trigger also, and it can rotate down. And these are not trades anybody ought to take until they're vetted. And the thing about having, I was talking about emotional states, okay? The thing about emotional states is How do you manage the lunatic under the hood, which we all have? It's statistical probabilities and familiarity with market mechanics. If you're in TraderLab, you would know where the market might go, not where it will go, and you would know why, because of the auction. This was too high and it was rejected and it was tested there, right there. That's a structured trade advanced methodology. Well, if we come back, what's too high? Isn't it right there? Let me throw this on here for you. I won't draw it. I'm just going to say, let's look at see where this, right here with the buyers. We have a sweep. This is a sell trigger. Look where the test is. I'm just going to throw a little line in here. I want to keep it simple. See where the volume is? That's a trigger there. The other short is here to there, long to there. Where's the short? There, back to there, back to there. See it? Is everybody tracking? Is this complicated? Bad Orca, there's several different settings for the heat map. You got to open it up. And actually, it isn't just the this. So you can see what you want to see. I personally, I don't want to see a lot of this algorithmic behavior. I can't do anything with it. This is what interests me. Resting liquidity here interests me. If somebody jumps in the book, that'll interest me, but not this. I mean, I'm aware of it. I know what it is. I can't do anything with it. It's algo. I'm interested in this because typically or often, and it doesn't mean it'll stay there, this is more market maker oriented. And again, it could be pulled, and walking on liquidity is like stepping on a banana peel. So nothing is predictive. Everything is maybe. Last short is here. This is another trigger here, more micro structure right here. So these are triggers and triggers. Remember, Russian dolls. Where was my support? I have it there. I have it here. And, we'll see. These are structured trades. Now, you are not going to be able to do this when you first come to TraderLab. But you don't need to. You only need one structured trade. The idea of the TraderLab was and is to help you understand how the market works, why it does what it does, and then to create a template of structure. How do you reverse engineer and create a structured trade? Well, you take the 60 PDFs and you pick one out. You go, yeah. And you can ask in TraderLab. In fact, I did a poll last week, which would be if your friend asked you, which trade should they start with to reverse engineer and vet? And I did a poll, and you can find the results of that. And then you take these examples out of those 60 PDFs that I share, and also watch the streams. There's a whole bunch, obviously, a bunch of these things, but some of them are highlighted in the TraderLab library. And then you can see all of this put into play. I don't go into advanced processes too often here because I don't want anyone to think that this is just red light, green light, or any of that. Some of these are advanced that I'm showing you, but they're all derivative. So, you can get down when you're using a high tier order flow tool like Bookmap, and this is the area, and you have your sellers here, and you see your sell icebergs up in here. Sellers are below the buyers. That's a trigger. Location. You see, the thing you got to understand is you're going to see triggering structures everywhere. However, this is called, what real estate, the saying is, and we're under yesterday's low, right outside of range. Location. Sellers break, sellers here below the developing volume point of control. I mean, if I took a short here, my stop's got to be out here. And we could just as well tag this. This is the mid, take it out. This is trading. And if it's stop, that's why I tell you I take stops every day. Why do I take stops every day? because I'm protecting my account and it's just overhead and cost of production. The reason, and it's not about being right, it's about, is this a location to act? Do I have a trigger? Let's look. Now, when I come to locations, I open up Bookmap. Sellers are here. Now, I have no clue here. Sellers are below this buyer. That's my first inkling. Now, with order flow, I would be short here. But if I'm doing a structured against this, so I have this trigger, micro high volume is up in here, break low, trigger. All these are shorts in TraderLab. And then where are you trying to go? Back across. You would scale against this, and then you're looking again to come under here and potentially continue on your merry way or not. That's just one trade. It doesn't matter. And then you have trade management that you've vetted. So the idea is you come to TraderLab, you pick one trade. And the idea of picking a trade is it's going to cause you to have to learn multiple elements. Once you build the template of how to reverse engineer structured trades and then find out what the statistical probabilities are of that trade, winning more than it loses, having a positive expectancy. Here's how you manage your fear. And this is what because we're all the same, right? I found that once I created a tangible statistic of what was my probability of getting risk neutral before taking a full stop, because if I get risk neutral, the worst that will happen is that I'll scratch the trade most likely. And my broker will send me a gift basket, is that now if I have a positive expectancy, instead of being controlled only by my fear, which is all you got, now I have something tangible outside of my fear. So when I come to a structured trade, and I know when I take a short in this configuration, yesterday's range, right, that I have X% probability of covering my risk, now I have courage. I still have fear, but the fear isn't the only thing that's present. Now I have a tangible statistic to give me something to go at. Yeah, but I've got X% probability of getting risk neutral. I'm going to take this trade versus looking for confirmation because I'm trying to, and my fear is what's managing my trading, not my trading. That's in my best interest is to enter when I have uncertainty, but a trigger that's been vetted. Does that make sense? Cross, if your PLC is in the wrong place on Bookmap, then you don't have your session volume profile set correctly to reset at RTH open. And you would set it to at time. Just saying. Are you guys tracking? Please give a like if you're visiting in YouTube. Let's see what we got here. Buy sweep. Let's watch. Buy sweeps often suggest the possibility for a rotation down. Doesn't have to do anything. The fact you see a sweep, it can keep going. It's when I have the sweep detector going, it's showing me the urgency and often. And where am I trying to go here? Well, let's look at the profile. This is an outside edge called the low volume node. It's out here. And what's sitting here in the book? Liquidity. Now, it doesn't mean the market has to get here. And I've got a buy iceberg sitting out here going, hey, don't forget me. That's how I, kind of think about these things. And the other part of it is, so the sweep suggests a rotation. Let's see if we can make some sense out of this, by the way. Okay, the volume is going to shift here. What that's telling us is this might be too high. And if the volume point of control shifts over here, now this will be the new retail price. So we'll see what it So this suggested the rotation. Okay. That's all it does. It doesn't tell you anything else. So one of the ways I use the sweep is that if I come to location and I have a sweep, it just sweetens the pot. Let's see what happens here. I'm going to take this off. It's stale. How we doing, guys? Please give a like if you're visiting in YouTube. And guys, visit the Bookmap Discord Trader Lab community. There is no cost. And, probably most of you have been in paid chat rooms or taken courses and all. And in the end, is your trading any different? Or are you caught in Trader Groundhog Day, where you work hard and keep waking up with the same outcome? It isn't about piling indicators on to create certainty. I can assure you of that. It's really the opposite. It's about creating simplicity so you can make decisions with minimizing conflict, because you're already conflicted. You're in an environment of 100% uncertainty 100% of the time. So I don't think, at least from my experience, adding more creates more certainty. It actually creates more conflict, which then triggers your emotional states even further, looking for confirmation. So you might say the solution that we typically employ actually creates more of the problem. You want to learn more about this and join the Bookmap Discord Trader Lab community. It's available to everybody. But I am going to say, if you're not ready to go to work and really embrace the potential to create a career for yourself in the business, because it's going to take work. It's not a quick fix. There's no plug and play. Plug and play is pretty much an attempt by some vendors just to coax dollars out of your pocket. I'm going to say don't bother. And it's just a personal opinion. I've done it myself. I went early on in my development. I went to seminars, and there was no internet and there were no computers when I started. So it was either buy a book. And I remember back in the early 1980s paying over $100 for a book. And that was real money back then, And I read the book. I thought it was great. And couldn't do none of it worked, but it was all looked good on paper. So there's more to trading, but I will say there's no plug and play. And if there was, we'd all plug and play and we'd all be done with it and we'd all be laughing going to the bank. But the only laughing I think it's being done is by potentially some snake oil salespeople. And you have to, of course, we're all adults. You got to determine. The other saying is, well, at least I got something out of it. If you can't put it into use and it doesn't align with you psychologically, even if it is viable, it's still not going to work for you. So you just have to find what speaks to you, what makes sense. And I think for a lot of us, we have trapped equity. All the dollars we've thrown either at the market or into education. And if we're still staying, getting the same outcome, I call that trapped equity. That means you're paying for the same course over and over and over again. It's like going to school, paying tuition, and then going back and taking the same course again because you're not learning. At some point, you want to untrap that equity. You can't get it back by doing the same process. You might be able to recapture your equity by learning from it. Buy sweep, down rotation. Buy sweep, down rotation. And there's nothing here. Okay, this is just rotations. Okay, no trades here. Unless you have an edge, and then you should, as they say, knock your socks off. How we doing, guys? How we doing in YouTube? Please give a like if you're in YouTube. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. Download these 60 PDFs if you haven't. These are actual trades, some of these, and some are screenshots. What's this thing? I think this, I don't know. Anyway, These are, and some of this is just research. I was working with Bookmap developers. This is many years ago. This is in 2020. So I'm not a vendor, there's none of that. But and there's a lot of different trades here, and I just kind of threw them together. When I first did this, I wasn't intending on doing the Trader Lab. These are actual trades. You can see where I took them, targets, another target up here. All these are structured trades because I just wanted to share. I was posting these in the Bookmap general chat, and then traders were saying, "What are you doing? What are you doing?" Then the Bookmap Academy asked me if I would post, and I did, and here I am. So, but part of it has to do with having been in the business as long as I have, and I think you can glean some ideas from my experience. Um, and also I understand how hard it is to learn the trade, and the reason is that it was hard for me. I didn't have the resources you have, but I also didn't have the distractions that you have. So I'm not sure what's the better situation, be in the dark or be buried under a pile of information. Anybody can now go out on the internet and whatever and become a guru. And you can spend a lot of time or waste a lot of time, in my opinion. So we're looking for this variable high volume node, and we're looking out here, right? Outside edge. So out in here, and it doesn't mean, there's a lot of ways to trade, you could just trade the targets, or you have runners, and then you're using a trade management process. So you could actually use triggers, and you have to vet all of these for yourself. So there's not one way to trade. The whole idea of Trader Lab is not what I do. I mean, I trade different time frames and fractals. There's traders that are in Trader Lab, they're going to trade this kind of thing. For me, if I get a trade on and I trade larger rotations, I prefer, and it's just a preference, less trades, more range. So my risk, if I trade less, I'm just exposing myself to less risk. And if I'm getting larger ranges, it pays for the stops that I inevitably take, because it's not about being right. It's about being here for tomorrow, good risk management, a plan that has an edge. And I believe almost anyone can learn how to trade if they come to Trader Lab. So you've got an invitation. Please give a like on the way out. If you're visiting in YouTube, use the link in the bottom of YouTube. Review this stream and all the others that are out there in the YouTube or in the Bookmap Discord Trader Lab community. You have an open invitation. Please give a like on the way out. Appreciate you guys visiting the Trader Lab today, and look forward to seeing you real soon. Thanks again, guys. Trade safe. Adjust your risk to the current environment. If it doesn't fit, go on sim. You want to be here for tomorrow. There'll be many, many tomorrows and thousands of trades in a career. If the risk gets outside your parameter, your job is to manage FOMO and be here for the next trade and the next day. Thanks again, guys. Have a super day. Don't forget the like on the way out, and I look forward to seeing you real soon or visiting with you in the Trader Lab. Thanks again, guys. Appreciate it.